So it's a little bit of an unusual situation to have 5 of the 6 biggest banks reporting all within, a span of a couple of hours of each other. And, before we get into the specific names, would just love to hear overall, what is your expectation for Wall Street this quarter? Because consensus on the street seems to say that trading looks particularly bright.
Well, I'd say overall earnings look very good. I'd look for earnings to be up 15 to 20% year over year. And if I had a tagline, it would be banks and barbells. And the barbells for strength, but it's not just overall strength in earnings and revenues and efficiency. It's a combination. On one part of the barbell is Wall Street, where we think the industry is poised to have record revenues this year for a variety of reasons, certainly fixed income trading, equity trading. Now you're seeing IPOs, an acceleration of mergers, but also Main Street. And I think that's the newer emerging story with this acceleration in middle America commercial loan growth. So some of that might be trickled down from AI, but also companies are saying, enough waiting. The geopolitical situation is the new normal. Let's build that new factory. Let's build that new plant. Let's have capital expenditures. And I think you're going to see that in the commercial loan growth at the largest banks and then the regional banks when they report too. So the two parts of the barbell, Wall Street and Main Street.
Right.
And I think that's a very good setup.
So banks and barbells, I mean, when you think about sort of the setup here and then you go through your roster of coverage, which bank, if you had to pinpoint one of them, are you most interested to hear from at this juncture?
Well, JPMorgan is the biggest bank. They're first. We have Jamie Dimon, who is a generational CEO, and he just lost the person I thought was going to be his successor. So this is the first earnings call, I believe, when we have somebody new who will be overseeing the consumer business. So I want to hear his take on the economy, the financial system, the competition, and their positioning specifically as relates to the consumer now that they've shuffled management around a little bit. But he's always very authentic about what he thinks. He's very independent. And so will it be the sky is falling or things are okay? So that's always a big question when it comes to Jamie Dimon and JPMorgan's earnings. But I do think their earnings will be quite strong tomorrow.
I am curious, though, too, about the stock. And it's done relatively well. But is that also the Dimon premium? And what does that premium or lack thereof look like if he's not there?
Well, the stock has underperformed this year.
Yeah.
Over the last 3-4 years, it's been fantastic,
yeah.
right? And under Jamie Dimon, since he became CEO, it's best in class. So, but this year things have slowed down because they're spending more than they're generating in revenues. And this is simply a timing mismatch. They invest for the 3 to 5 year horizon. And so you have confidence in them being the growth stock among banks. But there is a Jamie Dimon premium. And I think the bottom line with the exit of Marianne Lake is that investors want Jamie Dimon to stay. I think he'll probably stay another 3 years.
Yeah.
Investors did not want Marianne Lake to leave. She was the ex-head of consumer. But if that's the price to pay, that's the price you pay.
Talk to me a little bit about Citigroup. I was just reading a great story today in the Financial Times about a lot of the changes that Jane Fraser has made since taking over. In your view, have those changes been for the better? Do you look at Citigroup as a long-term growth story?
Come on, it's been my #1 pick for the last 2 years. Yeah. And as you know, I had the big sell rating on it back in the financial crisis. So, and I testified to Congress partly about Citigroup. So over 3 decades, I say Citigroup is undergoing a multi-decade cultural transformation. And cultural changes take time. It could take 5 to 10 years. But Jane Fraser has put this company on the right trajectory now. They've changed from 50 years of a global matrix structure to 5 lines of business. So it's easy to talk about it now. I abbreviate it by payments, banking, markets, cards, and wealth. That's it. And there's a CEO for each one of those 5 lines of businesses with targeted returns and CEOs that are responsible for achieving those returns. And there's nowhere to hide. Those 5 CEOs report directly to Jane Fraser. There's none of these co-presidents or dual heads or anything like that. And that is night and day different from Citigroup of the past. And frankly, it's better than some of their peers, too.
Yeah, absolutely. And we're seeing that, co-structure really emerge at a lot of the other places. I know that Goldman is particularly fond of it. I do want to talk about the other end of the barbell because we're talking about Wall Street, of course. But when you think about the regionals, and we have a little bit to wait here, how are you expecting, some of those smaller size, those mid-sized banks to perform?
Well, the stars of this quarter will be, Goliath is winning, the largest bank. That's been our theme. So that's going to be the big five that report. You're going to see some strong results. Citigroup, JPMorgan, Bank of America, and especially Goldman Sachs and Morgan Stanley. So they're going to be the standouts. But, surprise, not surprise, regional banks have some capital markets also. They benefit from record high stock markets. Their fee revenues can do quite well. But also that commercial loan growth coming back. And it's been a long way, decade to date, commercial loans, the traditional commercial loans. I'm not talking about hyperscalers or data centers or the AI stuff. I'm talking about plain old middle America commercial borrowing. I think this is an inflection point, and I think the regional banks will be talking a lot more about that. And I'll be digging into that, what regions, what industries, how sustainable. But I think this is quite sustainable for the next few years. So I'm ringing the bell on traditional commercial loan growth coming back, and that should help the regionals disproportionately more.
Only have about 30 seconds left. Is there anything that could surprise you this earnings season out of the banks?
I would say, and that's one of the questions, like Goldman and Morgan Stanley, what can make those stocks go even higher? Absent, if those two firms conducted due diligence for the big IPO and actually went to Mars and found gold, then maybe that would be extra upside. Okay. But no, if the sponsors came back with more activity, we've been waiting for that for a while, or if there's any credit issues, the talk of cockroaches, Jamie Dimon's term for credit losses, we haven't seen that for a couple quarters. If that were to come back, the market's not priced for that.